We look at earnings reports and look at their revenues, and we're seeing a lot of companies showing negative revenues. So, the headline numbers are heavily influenced recently, certainly in terms of some of the upward revisions in personal income by transfer payments, that's government stimulus, and interestingly, dividends. But not if you look at the economy, the cyclical part of the economy is sick. It's sick. If you look at the sectors in the economy, one by one, they've been falling into a recession, no matter what the headline numbers say. Housing went down immediately when the Fed started raising rates. We're down 20 to 40% still. That's a recession.
An important turning point for the Federal Reserve's policies was reached on Friday when the U.S. Labor Department delivered a significant report showing that inflation has decreased for the third consecutive month. With its previous high of nearly 9%, the inflation rate dropped significantly to 3.2%, indicating a slowdown of the economy. Prominent economist Cathie Wood responded to this data on social media, saying that it is an obvious sign of the deflationary forces she has been warning about for months. Wood has been outspoken in her conviction that, in contrast to the Fed's ongoing tightening stance, disruptive innovation and technological improvements are pushing down prices. Wood discussed her opinions on the Fed's strategy in her most recent interview with Bloomberg, outlining why she thinks more rate increases could be bad for the overall economy, particularly when innovation changes employment and industry trends. As we bring you clips from Cathie's interview, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more insightful content. Let's dive into Cathie Wood's perspective on inflation, innovation, and what lies ahead for the U.S. economy.
Do you think the Fed rate cut was a mistake?
Absolutely not. Not at all. It's been very interesting to watch the revisions in economic activity. Until this report, the revisions in the employment numbers had been down, and they were much weaker than had originally been reported. We look at earnings reports and look at their revenues, and we're seeing a lot of companies showing negative revenues. So, the headline numbers are heavily influenced recently, certainly in terms of some of the upward revisions in personal income by transfer payments, that's government stimulus, and interestingly, dividends. But not if you look at the economy, the cyclical part of the economy is sick. It's sick. If you look at the sectors in the economy, one by one, they've been falling into a recession, no matter what the headline numbers say. Housing went down immediately when the Fed started raising rates. We're down 20 to 40% still. That's a recession. You've got non-residential construction in recession. So, autos, very weak.
Cathie, I know it's a backward-looking number, but then what do you make of today's payrolls report? 254,000 jobs added to the economy for the month of September. And that doesn't seem recessionary.
So if you just let me finish, Tim, I'll get to that in 1 minute. So we've got those sectors, and then you've got the small and medium business sector. Their confidence is at 08-09 levels. And we've got certain pricing measures, certainly the cyclical ones, that have been deflationary, actually. So one thing that I do think is going on that is helping is as prices are coming down and the consumer's getting better and better deals, and they're spending. So I think that is sustaining. A lot of people say real growth causes inflation. In this case, and actually in history, most times if you cut prices, you'll get more activity. The consumer, as long as the labor market hangs in here, and yes, today was very reassuring that way. As long as the labor market hangs in here, and companies like Walmart and Costco and auto companies either increase their discounts or cut their prices, I think the activity will come. And the labor market will continue to hang in. But if they try and jack prices back up, it was very interesting to see FedEx, after turning positive in revenues and then turning negative year over year on revenues, basically saying they're going to use prices to make it up. I think that's going to backfire. And I think during the next year, that many people will understand how deflationary the undercurrents are in the economy. Now, deflation is not always bad. Part of it is because of innovation, technologically enabled innovation. The car prices, EV prices are coming down. Their costs are coming down too. So I think there's a lot of confusion in terms of what's going on out there because productivity is stronger than expected, giving companies the latitude to cut prices and salvage margins. If that sustains, great.
Cathie Wood has maintained her position that deflation will eventually result from the Fed's aggressive rate hikes. She warns that the tightening tactics of the central bank may drive the economy into a deflationary cycle and feels that they have gone too far. The CEO of ARK Invest believes that the Fed should drastically lower rates when inflation begins to decline, which she believes will occur. Eric Bean, a labor lawyer and partner at Foundation Law Group, agrees with Cathie that the U.S. economy benefited from the most recent 50 basis point rate drop. He attributed the bigger drop to the deteriorating labor market and rising unemployment. Let's go back to Cathie's interview, where she talks about the importance of invention and how the elections in November could influence future advancements in American technology. And don't forget to like this video, subscribe, and turn on post notifications for more insightful breakdowns like this.
So our focus is on innovation, and something very important happened this past year. We were very concerned that excessive regulation was driving innovation off our shores, particularly when it came to crypto or digital assets. We've had a very hostile regulator. And the same, I would say, is true of the FTC in terms of denying M&A, because that has prevented a lot of innovative companies from enjoying liquidity events by selling out to bigger companies. I think we're hearing from both candidates that those two jobs are on the line, maybe for that reason. And we're seeing more alignment that innovation solves problems, and so we should not discourage it. So from that point of view, I'm happy to see the bipartisan movement here. We'll favor lower regulations every day when it comes to innovation. I don't think tariffs are a great thing at all for innovation and for economic activity. So there's something on both sides that will give us pause. But the most important thing is the biggest impediments to innovation. We think that we're developing clarity around what's going to happen at the SEC and the FTC. Well, we've been doing research on AI for 10 years now. Mm-hmm. That's why we were so early into NVIDIA. We've obviously taken it down in most of our portfolios out of the flagship. One of the things that we've been looking for is the next big play. Mm-hmm. We think NVIDIA is still a fine stock, but in terms of the unexpected out there, we do think it's going to be in the software layers. And as you know, Palantir has become a big position for us in the top 10. UiPath as well, it had a stumble, but it's coming back now. And I think as more and more people understand how well positioned it is, it will do very well. But a lot of the software companies that we think are going to benefit are in the private sector. And I'm thrilled that we have a venture fund. Purpose here is to democratize venture capital so that for $500, anyone can get access to OpenAI, which is the third largest position, or SpaceX, which is the largest position. But if you look at software, many people say, well, we have so many software companies in the public markets. What do you mean? And what we mean by that is we think that the software world's going to change fairly dramatically. And we're going to see a shift, maybe a share shift away from software as a service towards platform as a service. So think about Palantir and foundation models, and infrastructure as a service, so cloud. And the reason for that is because engineers are going to be made so much more productive, developers so much more productive by OpenAI and Anthropic and xAI and Google and Meta's Llama 3. We're going to see companies customizing their own software, customizing software for their own companies, as opposed to just going automatically to, one-size-fits-all software as a service.
The goal of ARK Invest, according to Cathie Wood, continues to be innovation, and this year has been crucial in addressing the overbearing rules that were keeping technological advancements, particularly in cryptocurrency and digital assets, out of the United States. She made the argument that excessive regulation, particularly by adversarial organizations like the SEC and FTC, has stifled innovation and kept many creative businesses from experiencing liquidity events. But now that both parties appear to agree that innovation is necessary to address significant economic issues, there may be less obstacles to regulation down the road as a result of this bipartisan backing. She also mentioned the significance of preserving an atmosphere that is conducive to innovation, warning that excessive regulation and tariffs hinder both economic expansion and technical advancement. She is optimistic that future regulatory approaches at the SEC and FTC will become clear, despite certain obstacles on both sides of the political aisle. While Nvidia is still a great stock, Wood pointed out that software layers may hold the key to the next big opportunity in ARK's artificial intelligence research. Leading this change are commercial companies like SpaceX and OpenAI, as well as organizations like Palantir and UiPath. You might sum up Cathie Wood's optimism about innovation influencing the future. Until then, remember to like and subscribe for more daily videos like this one.